What's up, y'all, and welcome to Slaying Capitals. And today I'll be doing a video on a trade that I actually took this week on gold. This trade I actually sent it to my free Telegram group on Telegram. So if you're interested, you can actually join my free Telegram group on Telegram. The link is down below this video, and you can also find the link on my bio on my Instagram. So let's get into this video. So before we get into the video, actually, let me show you guys how I trade. I pretty much trade supply and demand, and pretty much I really don't like complicating most of my my setups. I like, actually labeling most of my setups really simply, so I can also just pretty much understand it and from other people. So this is what I seen in that trade. And actually, if you're kind of struggling with break of structure, identifying break of structure and change of character, I got a video that I just dropped. It's a 40-minute video explaining break of structure and change of character, and now you can actually implement it in supply and demand so that you can actually be profitable in the market. It's a 40-minute video. It's really helpful. So let's get into this. So I'm gonna label that as break of structure. I'm gonna clone this. I'm gonna clone this out. I'm gonna clone this out again. I'm gonna clone this out again. Whole lot of cloning. My label this is my change of character right here. My change of character. Clone that. Clone it again. Okay. Now let me grab my zones. It's my zone right here. Clone it. Okay. So this is pretty much how I trade, and the trade that I'm going to be breaking down, y'all, is pretty much like this. It's pretty much like this. Of course, we all know that the market is not always like this. The market doesn't always move in this proper direction. So yep. But the trade that actually I'm going to be breaking down actually moved like this, and so that's why I was trying to explain to you guys how I actually trade. So let's get into the video. Let me delete this. Let me delete all this right here, and then we're gonna get into the video and break it down for y'all. Yep. And by the way, I'll be dropping down. I'll be dropping in the confirmation that I took the trade. That I'll be breaking down right here, the confirmation that I actually sent the trade to my Telegram group, and my traders, my students actually took advantage of the trade. So this right here is the setup that I sent. So okay, pretty much the trade on the left was in an uptrend. Then right here the trade changed character. Then price reversed, mitigated something right here, which was pretty much this right here. This supply area right here. This supply area right here. So unfortunately, right here, this setup right here, I seen this setup, but I didn't take this trade because I was not on my computer. I was not next to my computer, so I didn't take this trade. So pretty much the trade, the market took out the structure right here, break structure. Price came down, took out the structure again, and then price retraced, mitigated the zone, then price dropped. So this is where I was. Price took out the structure right here, right? And then this is what I seen. I seen price take out the structure, we in a downtrend, and then I seen liquidity up right here below my initial zone that I'm planning to actually take. So this is what the problem actually came right here. Most traders mark this as their supply zone. Most traders will mark this as their supply zone, and this ain't wrong. This right here is not wrong at all. this right here is not wrong at all. It's not wrong at all. But what people really fail to understand is that this whole thing right here, not just the inside red zone that I marked, but this whole zone right here is supply zone. Most people don't really understand that, because this zone is too big, so they go for this little small zone right here. And that's why most of the time you'll see that the market will come in and we'll pass this zone and actually enter here and then go back, and then you gonna say that the market didn't respect your zone, while the market actually did respect your zone. It's just that you didn't mark your zones correctly. So I want to actually really put this out there, because this was the case with this trade right here. So once I seen this sell side liquidity right here. This was sell side liquidity. I seen this sell side liquidity right here. I started waiting for price to actually do it. I started waiting for price to actually come up, mitigate this zone right here, and then get a sell. But as you guys can see, this zone is too big. This zone is really too big. So it's really crazy for me to actually get trade from this zone. So what I actually did was wait for price to mitigate our zone. Then I went ahead and took my entry on the 10 minutes lower time frame. That's where I got my entry from. So let's get in. Let me show you guys how price was moving. So price went ahead, boom, price mitigated our zone, right? Price mitigated our zone. And this what I did. I went down on the 10 minutes lower time frame, and over here I went ahead and identified my swing low. This was my swing low right here. So what I did, I started waiting for price to actually take out the swing low, and started waiting for price to retrace and mitigate some type of POI or supply that I could have actually sell my trade from. So let me show you guys what I did. Price came down, took out that zone right there. Price took out that zone, the swing low right there. I mean, my bad for saying zone, swing low. So okay, price took out that swing low. That was a break of structure. Then I went ahead and marked this right here. This was my POI. This is my POI right here. I'm gonna just label it as my entry. That's how I mark most of my zones, entry. So what you guys can see is that instead of entering right here on this big zone, this 1 hour big zone right here, where my stop loss would have been right here and my entry would have been right here, you already seen how big it is. But now look at the difference of entering right here on this 10-minute time frame, where my stop loss is gonna be right here above here, right here, because I usually place my stop loss 5 pips or 3 pips above my initial stop loss from my original zone. So now just imagine this trade compared this zone compared to the zone right here. Y'all see the difference, right? Yep. So it's what I waited for price to start going up. Waited for price, and price actually engineered some type of liquidity right here, which was actually a good sign. Engineer some type of sell side liquidity. The price took out the liquidity, which is good, which is a good sign. It's a good sign. I can also label this as liquidity, yeah, but it's not important. Yeah, let's go. Price went down a little bit, and then boom, price did what? Price mitigated our what? Our POI, point of interest. While price mitigated our point of interest, I entered this trade, this position. placed my stop loss 5 pips above this initial stop loss. So, and it was in sales. Pretty much after price mitigated our POI, price dropped. Dropped. And as soon as price took out this swing low right here, I went ahead and placed on my trade on break even to run free. And that's where I am. That's where I was in the market. So this was all that I had on this chart right here, on this setup. It was not really too much to it. The thing is that most traders got confused. Most traders in my Telegram got confused with this zone right here. Most traders got confused because most of them did actually place their zone right here, and their zone was not actually mitigated. Most of them did place their zones right here, and their zone was not triggered. It was not mitigated, and yep. So once you see something like this, always mark this whole thing. Always mark the whole thing, because that's the whole full zone. And that's all I have for this trade. Hope you guys enjoyed it. And add slang capitals. I drop a lot of informational content, educational videos on my Instagram. So if you are interested in things like that, please go ahead and follow me on Instagram. Add slang capitals. And if you're currently not subscribed to this YouTube channel, please subscribe to this YouTube channel so that this video can actually be recommended for more traders who are actually having problems with this type of problems, who are actually having problems with this type of promoted channel. And let's grow the community. So we can help each other. So that's all I have for this video. And yeah, take care. And this is Slang Capitals. Bye.